Hi there, my name is Gary Doyle, Director of Trading and Technical Analysis for Southegg Capital Management LLP. Southegg Capital are a proprietary trading firm based in the City of London. We have around 25 traders trading both company funds and client funds who specialise in trading Forex, commodities, indices and options. We also provide world-class trader coaching and education. Now what I wanted to do today was to show you a really simple trading strategy. It's useful for both experienced traders and people who are very new to trading because it's very simple to trade. It's based around the daily time frame and just uses a few technical indicators. If you've never traded before, what you need to do first of all is to set up your trading account. If you go to www.southeggcapital.com/easy-forex, Easy Forex are the broker that we use. They will give you your first 5 trades risk-free up to the value of £200. So if you've never traded before, it's a really nice way to get involved with the markets without putting too much money on the line. We use Easy Forex just because we found them very good to work with over the years, sort out any problems straight away. So go on that link, register with them and get your trading account set up. Once you've got your account set up, what we need to do is go to our MT4 platform. Now your chart will look something similar to this, maybe a little bit different the first time you open it up. What you want to do is get your chart up, so we'll use euro dollar for the purpose of this. We can use any currency pair or any product, any index, any commodity to trade this strategy though. So click your chart window. Now you want to go on a daily time frame. I prefer candlesticks, but it doesn't really matter. Maybe zoom in a little, maybe shift your chart over to the left. Now we need to put our indicators on, so we go to Insert, Indicator, Trend, Moving Average. The first moving average we want to put on our chart is a 6-period simple moving average, so click OK. Second one we want to put on our chart is a 21-period simple moving average. We just change the colour so that we can tell which one's which. Click OK. Then we go to Insert, Indicators, Trend, Oscillators, Relative Strength Index, and we choose RSI. So you want to change your period there to 9 from 14. Most chart packages will tell you it's 14, but I use 9 because it gives us a slightly faster signal. And click OK, and it puts our RSI on our chart. So now let me explain what we're looking at. Each one of these candlesticks represents 1 day in time. A moving average is the average closing price of the previous X periods of time. So in this case here, our 6-period moving average, the yellow line, is the average closing price of the previous 6 days candlesticks. The 21-period moving average is the average closing price of the previous 21 days moving averages, candles. The reason we use moving averages is to give us an indication that the price might be changing direction. So here, when the faster one crosses below the slower one, the 6 crosses below the 21, gives us a signal to sell. When the 6 crosses above the 21, gives us a signal to buy. I use a 6 because it's 1 day longer than a trading week, and I use the 21 because it's 1 day longer than a trading month. Now we have RSI. RSI traditionally shows us when a product is overbought or oversold. So by overbought, we mean when the line crosses above 70, gives us an indication that there might not be much of the move left to have, and we're expecting the price to come down from there. When it crosses below 30, we're expecting not much of a move left to be had, and we're expecting the price to cross back above and move up from there. I use it slightly differently. I just use it to tell me how much strength there might be left to have in a move and how much legs there are of a move to be had. So what I'm looking to do is when our fast moving average crosses above, I just look at my RSI to make sure it's not above the 70, not above the overbought level. And as long as it's not, I'm happy to take that long trade. When it crosses below, when the faster moving average crosses below the slower moving average, as long as RSI isn't below 30, then I'm happy to take that short trade. So the strategy, all that you do, your 6-day moving average crosses above the 21, RSI is below 70, you buy, you put your stop loss just below the last swing low if you're buying. So here, you would have put your stop loss just below here. and you would have bought. Now in terms of taking your profit, you can either set a trading stop or just use previous levels in the market to tell you where you want to get out of your trade. So here the price went up a lot. Around here I would have been saying I might want to get out of my trade just because we've got a previous construction level where the price spent a bit of time before. Then here our moving average crossed below the slower moving average, we would have sold. RSI was above 30, so that confirms our entry, and I would have put my stop loss just above the last high point, and then I would have targeted down here because that's an area in the market where the price has spent a lot of time before. That's it. Very simple strategy, easy to use, very good for getting you started, or for if you're looking for a bit of a longer term strategy to complement your shorter term day trading strategy. So, do hope you found that useful. If you do find that strategy a little bit basic for you, then please feel free to follow us on Facebook and Twitter. I put my analysis on there every morning, so you might find that quite useful. You can also catch up with us at www.southeggcapital.com. Hope that you found that trading strategy useful. Good luck with your trading, and I'll speak to you all again soon. Thank you.